People, Mike Martin's here, Mike Martin's channel. Say hi to my friend Nick.
Hey, how's it going?
And it's actual pleasure to have him on our show today on Trends of the Housing Market. And today in Trends of the Housing Market, today is the 14th of December 2016. You people remember, please remember, we are teleprompter free. We are free and clear. We are just talking from the heart. Is that right?
It's just our opinions.
Where's the teleprompter? Anyways, Nick, tell people what you do.
I run a small consulting firm that specializes in real estate valuation and construction, a little bit of digital systems for restoration, things like that. But basically, I specialize in statistics and advanced financial analysis of real estate.
Excellent. So, you said you're putting together some sort of a thesis or something for what's your education level in this?
Well, right now I'm in the middle of my EMBA and I'm thoroughly enjoying it. My school would prefer probably that I don't use their name, so I'm just.
That's fine. No, that's fine. We just want to know your.
But basically, the long and short of it is I've got approved by my university to look at arbitrage within pure real estate. So you look at condos. Mm-hmm. A lot of them are very similar. So as a result, you could do a pretty accurate comparison of like for like, much like you would two different companies in a stock market.
Okay, I see how that. Yeah, so you're just basically taking analysis.
Yeah.
Taking analysis, forecasting it, and looking where things are going.
Yeah.
Kind of like my show, Trends in the Housing Market,
exactly.
Where I'm trying to get people to forecast where they're going to go or where they would like to see things to go, right?
Yeah.
And a majority of the people I'm talking to, and I'm going to be very frank with you, they just want to see a crash. They want it over and done. Pop the bubble, get it out. We're done. We are over. Because a lot of the youth is being bought out. And in the last, 5 years, things have gotten chaotic.
I couldn't agree more. People are stretching for every penny they can to hit their debt service requirement, just to qualify for enough living space to fit themselves. I mean, you look at the average household income in British Columbia in the 70s of thousands and try and run that on a debt service basis, you're lucky to qualify for a one-bedroom apartment nowadays. And we're not even talking in downtown. We're talking in secondary markets.
Yeah, secondary, third markets. And I keep telling my people that this is a massive Ponzi scheme, like what's his name says all the time, Max Kaiser on his show, The Kaiser Report. He keeps talking about Ponzi scheme. He's been talking about this before the 2007 and 2008 crash. He predicted that crash. He predicted everything, and not only him, and it's also, what's his name, Gerald Celente in Trends in the Market. He also predicted all this stuff that's been happening. He's been predicting things in the last 10 years. And he sees the Canadian market, they specifically targeted the Canadian market last week. And he quotes, "The Canadian market will be so damaging that it will affect every single Canadian."
So I think that really depends. And first of all, you have to kind of define what a Ponzi scheme is in your opinion.
Okay, he basically throws out banking. Banking, low interest rates, free money, get the money out there. It's free. Interest rates are hitting negatives in Europe. And hopefully the banks could recoup by eventually adjusting the interest rates to kind of balance the economy, I guess.
So there's two aspects of this. There's being on the right side of the hustle and the wrong side of the hustle. So if you're on the right side of the hustle, if you were born in the boomer generation or maybe a little younger, you have a couple properties under your belt, capital appreciation's helping you out, maybe you have 2 or 3 so you're getting some passive cash flow, that means you're on the right side of the hustle. It means that basically your capital appreciation, you're not leveraged to the point that you can't afford to make payments if things dry up on you real quick. Okay. Then there's the younger side and the people who didn't get into the market early enough. And what happens there is that they have to stretch just to make living space. So they have to leverage further and further just to hit a space that's adequate for living. And there just comes a fundamental affordability issue there. So for that portion of the market, what's happening is that they have a debt service requirement issue. They have trouble qualifying for the mortgage, and as a result, they're stretching. And those are the people who are really going to get hurt if the market crashes because they have so little equity in their properties to begin with.
Okay, I see where you're going with this. I get it, but you got to understand, those homes that are on paper and in existence and have ownership, you need to understand they're just changing hands. There's no more new blood coming into the market.
Well, see, that's where there's a bit of a discrepancy. So last year, if you were to ask me what drove the market, it would be pure supply and demand. Effectively, if you look at every in last spring, if you looked at every open house, every condo that was within an affordable margin, below $750,000, which would be a dual income family working very hard. If you looked at that price point, you'd see 10, 15 people at every open house, and there'd be multiple bids. So what's happened is yes, as of July when the laws changed, the number of bids has decreased, but there's still vastly more buyers than there are sellers. And with net immigration coming in, I don't see a huge softening in terms of supply and demand, and to me that's what's really driving pricing. I understand that construction isn't that much. I understand that land doesn't make sense on an economic basis that
One
way.
step back. Construction. Why is it fizzling?
What part of construction is fizzling?
Well, most construction is down. Was it 11.45% since last year of November?
Well, you see, part of that is because of the planning department. So what's happened is a lot of the municipalities around the Lower Mainland have actually had their staff gutted by developers, and as a result, the number of plans that can actually get through and actually get approved is dragging out. A couple of years ago, you used to be able to get approved right from DP to BP, that's development permit to building permit, in less than 6 months. Nowadays, it's almost 2 years, and when you factor in the 3 phases of approval, it drags on for years and years.
Can you tell us what the 3 phases of approval are?
Well, they're actually community-based. So what happens is they have an initial meeting with the planners, and the planners give their opinions and what they expect the developer to give back to the community. Then they have an initial meeting, and the public has the right to voice their opinion. People get to state, why they would have issues with this, why they wouldn't, and it goes to a council. And then the council approves or disapproves.
Okay.
Then they go to a second reading. Same thing happens again, but they've tightened up their plan to meet the requirements of the first meeting, and so on and so forth until you hit the third reading.
Okay.
The third reading is the critical point for most municipalities where the developer is pretty sure he's going to go.
Okay. So this brings basically the construction jobs into the community and brings in the material and brings in all the... Okay. But how do you feel, be very frank with us about our economy, like 30 or 40% or maybe even more. I know that Canada's economy is built off a percentage of student loans. I know that's very important. That's why the government took over. But if the government allowed student loans to go with independent banks, then it would be competitive rates. But that's not the case. Now, with the whole housing market, with the property tax hikes, they're trying to now offset. Okay, our market's built off real estate.
Yes,
BC.
It's one of our largest largest industries.
Now, ever since Alberta had that little problem, their fire and kind of the downturn on oil, and things happen, with OPEC overproducing oil. How do you feel with the Vancouver industry being based off housing and not production and exports and not making anything as much as we used to?
Well, we still have mining, we still have lumber, we still have tourism, which all play a major role. But yeah, you're right. When you have an industry when you have an economy that's largely dependent on real estate in and of itself, you have to count on that demand to continue. And if the demand doesn't continue, then you don't have a self-sustaining economy.
Now, back to the property tax hike that I kind of threw that in there by accident. But now, I got an article here that I'm going to show you that just came out this is from this morning. You wouldn't believe what's happening in Australia right now. I have a lot of people down under watching the show. Shout outs to everyone there. Here it goes. Vancouver approves property tax hike to fight fentanyl crisis. Property taxes will be going up next year in Vancouver to help fight against the record number of fentanyl overdose. Is that for real, or is that... Oh, I know there's a fentanyl overdose problem, but is that really why? Or is it to kind of stimulate the economy?
Well, I think it depends, because taxes generally don't stimulate an economy. They generally depress it. It actually stagnates things if you look at it from a theoretical economic basis. Mm-hmm. However, we have a real fentanyl problem in the city, unfortunately, and there's been a lot of overdoses. In terms of more so than other drugs, I honestly don't know. It's not my expertise. But, property taxes going up doesn't surprise me at all. They tried to push it up with the TransLink vote. They tried to push it up for a variety of reasons in the last couple of years, bringing up both the mill rate as well as the valuations.
Okay, so I want to close off this article and what you feel about the property taxes going up with this whole thing for fentanyl. You brought up a really good point. What is it?
Well, I mean, ideally they want to try and have the taxes raised to be able to increase policing. Now, in the past, policing and the war on drugs hasn't necessarily correlated with a decrease in the use of drugs, but regardless, they're making the effort.
All right, let's move on to Canada's gravity-defying household debt swells to $2 trillion. We talked about this earlier, people's TDS, total debt service ratio.
Everyone I know is strapped for cash. That's the bottom line. The market in Vancouver, between the cost of food going up,
Cost of
parking.
food skyrocketing, brother.
Last year I spent $750 in parking alone around the greater city.
Well, what about that bridge? That bridge now that connects...
The tolls. Yep. Just general cost of living's going up, and as a result, incomes aren't, and you're getting pinched. Whether it's in savings, investments, RSPs, that's what Vancouver is.
And what is that? How does that make you feel hearing that Canadian household debt has cracked the $2 trillion ceiling?
It doesn't surprise me at all.
And it says here the appetite for the bank borrowing remained unapt for the third quarter, setting a fresh records for total credit and mortgage borrowing. Statistics Canada reported Wednesday a widely followed ratio of household debt after tax income rose to another record high, almost 167%.
Well, that's not too hard to explain in mortgages alone.
Yeah.
I mean, cars haven't gone up that much in price. They've gone up a little bit, but not that much. But if you look at housing prices alone, I mean, last year they were saying the market in a lot of products were increasing by double digits, 18 to 30%. So, that's not going to be covered by income. That's not income growth because the average income isn't going up by anywhere close to that.
And you know what I say?
Debt.
Okay, but you know what I say, Nick, a lot, is if your TDS doesn't fit, and then in your TDS, in your total debt service ratio, usually they don't include your car insurance, your cell phone bill, your other stuff. Once you factor that in, is you're living off credit to buy food.
Yep.
And that's what I've been saying on my show for a long time. People are living off credit to buy their food.
Yep.
Unless, like I say all the time, the money's coming from heaven, which is the only other synopsis. I'm just throwing that out there.
And hey, the millennials,
yes,
it's coming from mom and dad. It's coming from inheritance. It's coming from savings.
You know what? I want to ask you this question. I had on my show last night. It's a really good question, and I really want you to think about this one. I'm throwing curveballs here, okay?
Yeah.
How does it work for the immigrant to come to Canada, to start from scratch, like our parents did, for example,
Yeah.
start from scratch and have to build from scratch? How would they ever get to own anything starting from scratch when the average guy is here, he's set, he's got his job, got his security, got everything, and he can't own? How is it going to work for people coming in?
I think it depends upon what status you're coming in under. If you're
Our parents coming in with a bag in their hand and $30.
Oh, it won't work.
Because
it just won't. Mathematically, the average household income is $70,000. You won't be able to debt service a one-bedroom apartment within a year or two, and incomes aren't correlating. It won't work.
So those stories of when my dad came to Canada, he had a duffel bag with $30, and those days are over basically.
Well, again, it depends how smart that person is. Did they go and have 10 other people invest with them and take 10% of their money? Did they leverage on leverage on leverage? Did they take a big chance and strike rich on a gold mine?
Yeah, I see what you're saying. I see the possibilities are endless. Yes.
But if you were to just say, I'm doing a 9 to 5 and earning a salary, yeah, you're hooped.
You're hooped. Unless you're Scarface. Anyways, let's go to this next article here. And let me know what your feelings on this one is. This is actually a really good one. Nearly half of BC's most expensive homes are secretly owned. Critics say that BC government must close the loopholes that allow homeowners in the province to hide their identities behind false fronts such as shale companies.
Well, it's very interesting conversation right now, actually. Not only because high net worth individuals are being able to get away with hiding their identity, which makes it harder for realtors to get a hold of them, etc.
Is that illegal?
Well, what's interesting is that there's the VANDAT system, right? And the VANDAT system is part of our tax structure.
Okay.
The VANDAT system is bolted into Paragon, which is the MLS Realtor link. Paragon is the new software that hosts all the realtors' intelligence. And I don't know if you heard, but there's some antitrust court cases being discussed right now in regards to MLS as a system. But basically, the tax part of that is your VANDAT. it generally says one person's name and their ownership address. However, a lot of entities now are worth more than 2 or 3 million, and they're honestly worth being put into corporations to avoid the PPT tax.
Exactly.
Whether you're putting it at LLPs or corporations, there's a variety of ways so that you can avoid that 2% PPT tax if it's not your primary residence.
And then now we're entering the severe gray area.
Yes, and so this comes to like kind of the central, some of the central theory of my thesis is that the real estate is still a gray market. You look at stocks and you look at bonds. If a person gets proprietary information about zoning or privileges about what's going to happen in a neighborhood, they can't use it in regards to a publicly traded stock.
Exactly.
But it's still kind of the wild, wild west when it comes to residential real estate and real estate in general within the greater Vancouver area.
How do you feel about people, foreign investors coming in not having to prove their income when the typical Canadian has to jump through hoops?
Well, I think it depends. So is that person going to do a non-conventional lender, or are they just going to go cash down? And see, that's where the key comes in, is that the banks here have criteria regardless of whether you're local or you're not.
Right.
What the issue is that we can't see transparently into China. We can't see transparently into a lot of other countries.
Yes.
As a result, situations like Suncom come up where rumor has it China is going after principal of Suncom because he owes a fair amount of money to them.
That's huge. Let's go to this other article here that I dug up. London tops, for my friends watching in London, this one's for you. London tops the cost of housing survey at 14 times the average earning. Cambridge and Oxford follow the capital of over 13 times earnings, and Glasgow and Liverpool have the lowest income to price ratio. Why is this happening in every English-speaking country?
I don't have an answer for you.
Can I tell you why?
Why?
I'm going to tell you what I think, because I know nothing, right?
Yeah, I know, but you're an expert in your own way.
I know nothing. So this is what I think. People want to park their money. China is not a safe place to park your money, especially if you have billions. Nick, frankly, if you had $2 billion, would you park it in China right now?
No.
Okay, there you go. But in all fairness, people are taking their money out and they're parking it into real estate because the whole stock market is up and down. With Donald Trump taking presidency, a lot of people are scared of where the market's going to go. I think it's just going to keep going up. But a lot of people are scared about putting their money into other countries that have strict governments. So the strict governments could take the property back. So a lot of foreign investors do not want to put their money into those kind of countries. So I'm thinking what's happening is a lot of the English-speaking countries are the non-racist countries that are open and freedom and open to, everything and open,
Are structured under common law.
Structured under common law, yes, and the Ten Commandments. And okay, so now, where does that put the Anglo or English-speaking countries? They're all of them, from Australia to New Zealand, a bit of South Africa, Ireland, England, the United Kingdom, and you got Canada and the United States. The United States is kind of still cold. The market's still pretty cool because the immigration laws to get in the U.S. is still pretty tough.
Well, you say that, but yet Phoenix in the rental market saw a 9% bump in average rents last year.
Really?
So, you want to talk about markets heating back up. There's a lot of markets that have already started to turn very positive in the United States.
Mm-hmm. But positive, but not like what we have going on here in Canada. It's not this ridiculous amount.
Well, and that's what's so interesting is that we had a huge boom last year. It was crazy with double-digit growth. But if you look at the single-family home price in the last 6 months, according to RegBev, it's actually gone down. If you look at the townhouse, it's basically stayed flat. Yeah. But apartments, a townhouse, it's gone up by 5.5 over an index of about 200.
Okay.
So 2.5%. And apartments have seen a similar growth rate.
Yeah.
And the reason for that is just affordability. There comes a point where there's only so many foreign investors. At such and such a point, you hit a point where affordability and depth in the market matters. You want to have fundamental support and exit strategy when you buy something. So for me personally, I look at everything sub $750K because at that point in time, a dual income could hypothetically support it.
But at what cost? I mean, you're skinning now. You're splitting hairs with a razor now.
Oh, absolutely you are. And you're very interest rate sensitive. Even if you locked in for 5 years, you're not going to put down enough principal reduction to really be able to mitigate your risk.
I see what you're saying, but you still need to this. You got your TDS factor. You're taking into consideration a lot of people not having children anymore.
Yeah.
Because of this cost of having children.
Oh, massive.
And this is huge because what happens when you have children? You need to expand.
And Canada as a whole actually has a reproductive rate below sustainability.
Yes.
Has for years.
Canada and Italy, the two major countries that have...
We're at 1.7 approximately per couple, I believe.
Yes.
And if you look at that, you go, all right, well, then how are we ever going to support the boomers retiring?
It's the 300,000 immigrants coming in next year that offset the loss of...
And that's the only way to do it, is to take on immigration or breed. But because of the cost of living, we're not breeding.
Exactly. So I think that's the death of the Canadian, what Canada is. I could see in the next 20 to 30 years.
Well, I mean, some would argue that Canada has always been an immigration-based country.
Of course it is. Always, yeah.
But if you were to be specific, it does change the psychology of the country, if that's what you mean.
Yes, things start changing. You start hearing more languages out in the street. Like I hear a lot of Portuguese when I'm out and about because I see a lot of people from Brazil. Hear a lot of Spanish.
Yep.
Hear a lot of Mandarin. I hear a lot of Japanese. I hear a lot of almost like I'm very in tune to understanding different languages now because I hear it so often. You wouldn't hear it, like, for example, if you were in Mexico somewhere, in Mexico City, all you would hear is Spanish, right?
The diversity is very intense in the city.
Yes. Okay, now let's. I want to. So I'm going to close off on. Not close off. Well, I'm going to talk about this one article I took here about Northern Ireland housing market busiest for the last 2 years. So this goes back to exactly what we just talked about. The people parking money in. So Northern Ireland's having the same thing, and they're having these auctions where people are auctioning on properties just like in Australia, and it's affecting all these. It's affecting the middle class. The middle class is just getting ripped apart. And people are either A, bought out, or B, stretched to the limit, like you said, or C, have given up.
So this is a personal theory of mine, and you could take it as you wish. But for anyone who's done any research in history, do you understand feudalism?
Yeah.
So feudalism basically was a fief system where effectively the middle class got drove into a point where they no longer owned their lands because the dukes or the kings took so much of their tariffs that eventually they were all bought out.
Yeah.
And effectively it came to a point where there were a few key landlords that owned and controlled, whether it was by military force or just ownership
Garrisons
itself, large chunks of land. So what you see is that, and you see it even in apartment buildings in the Great Lower Mainland. Apartment buildings in Kitts and Kerrisdale have always traded at a higher rent than apartment buildings in New West.
The Neiltown's higher than basically...
Yeah, but what's interesting about these two is that these two have been around for a long time, so you can compare them over time. So what's happened is that because there's a cap on rents at a growth based on percentage, all the tenants that have stayed, because there's major financial incentive for tenants to stay as long as they can now in rental buildings because of the cap and the Residential Tenancy Act, which says you can't increase rents above 2% plus the CPI index. What's happened is that the higher rent is proportionally increasing more every year than New West, which started at a lower base, and even though it's increasing by the same percentage, is increasing less so.
Moderately.
So what's happening is you're actually getting a substantial increase, more so on the precious land than on the secondary land. And it's almost disproportionate. And what happens is now the guy who owned the good apartment building in downtown or in Kitts or Kerrisdale can basically refinance that and buy New West for free based on the capital appreciation just on that percentage increase in rent policy.
Yes.
And he's done that just because he had a larger base to start with.
Yes, like a bigger piece of the pie that allowed him to refertilize other...
In addition to that, now he has more and more equity built up in his property, so as a result, he's going to get better and better credit terms. So now his cost of capital is going from 5 or 6% down to 2 or 3%, and he can afford to leverage harder than the person who originally owned the New West apartment building. Basically, that's what's happening, is that that's why we're seeing consolidation of wealth.
Okay. Very interesting point, and it's a very, 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 very important coming from someone that knows what they're talking about when it comes to more specifics and more getting down to the the nitty gritty of things. I just kind of go with the flow, kind of go with the media is trying to tell us, and I'm going with my gut too. Just like there's I've touched with you on the Australian market. You will never believe what's happening in Australia. And I'm going to read this article here from my friends in Australia. This is crucial. Australia housing auction clearance rates have been up above 70% for 20 consecutive weeks. Do you know what's been happening in Australia, Nick?
Well, I know there was some legislation that changed and some rules, but I don't know the details.
Well, I'm just going to make it really simple. Basically, it's an entire gong show. It's a gong show. The organization there is it's so bad that they've set up auctions within the house they're buying. So they have auctioneers, and they actually have 20 to 30 people that would sit in on the property they're buying. Then you feel these people, natives of Australia, the original people from Australia, can't own in their own country. And do you know what a 1-bedroom is going for right now in Melbourne?
No, I don't.
Sydney?
But I love Melbourne as a city. I spent a year there.
Okay, I got corrected with this because I did. You want to watch my video called Australia versus U.S. My point of view. Mm-hmm. I actually have the map of Australia out, and it's just me filming the computer. And I'm doing comparables to Florida and other parts of the U.S. compared to Australia, which you could buy, buying power. Mm-hmm. I was corrected by a gentleman on that because it was a 1-bedroom, 1 parking spot, 1.45 million. Yeah, that's the average. That's
like for like. Oh, that's the average.
That's the average across the board. And then the gentleman corrected me and said, "No, Mike, that means it has no parking spot." So he corrected me on that, and I really feel for the people in Australia. The people in Australia, you don't know what they're going through right now. The auctioneer setting up the houses, people coming in, the pressure on the families. We got to lay roots. We need a place. And anything bigger than a 3-bedroom in Australia is almost kind of unheard of. I don't know if you know this, but anything bigger than a 3-bedroom, it doesn't classify as a home anymore. It's something else. They call it something else. I don't know what they call it, but there's a name for it. And everybody's fighting over these 1 to 2 to 3-bedroom properties, and they're not so much in the prime areas either. They're in the outskirts of Sydney, outskirts of Melbourne. Everything is still costing.
Because you get enough space to actually live and raise a family, which is demographically, if you look at the echo boom, and people always call it the millennials.
Yeah.
But really it's the echo boom. It is the boom as a result of child rearing from the boomers.
Yeah.
And I happen to be born in the peak year of it in Canada.
Yeah.
So all the schools were packed the years that I went through school. Now we're shutting down schools because the Xers kids are in schools and they're not coming close to filling that gap.
But it's this ripple effect of the cost.
Yeah.
The cost of living, cost of operation, cost of everything has gone up. So the ripple effect has now touched family life.
But they're hitting that critical age where they're in their early 30s. They're going to have their first, second, third kid. And now they need space. They can't live in a 1-bedroom anymore. And so, yeah, I'd be scrambling for older 2-bedroom and 3-bedrooms right now in Vancouver as well as in Australia if that's the case. Because demographically, that's the product that's still affordable or close to affordable relative to income in some places. Mm-hmm. And it's really the only hope because, who can debt service a $900,000 townhouse in Vancouver?
All right, let's go over some of your thesis here, what you got going on.
So, I've applied and been approved by 2 major universities now to be supported in doing a statistical analysis of the real estate market. I happen to be one of the unique people who has a very large access to the MLS data in its raw form. So as a result, I have the information to be able to actually do multiple regression analysis on a variety of criteria related to the residential and commercial markets.
Okay.
Basically what that means is that people miss the market. They buy for emotional reasons, they sell for emotional reasons, they have to sell because
divorces,
a variety of forces, divorces, inheritance,
Yep.
And so as a result, people are motivated to sell or buy at any given point in time. Mm-hmm. And what happens is you get pretty substantial fluctuations, and this is where it comes to the arbitrage of real estate, like for condos, like I mentioned at the start. Where I find this so interesting is that we're sitting in the bottom of a tower right now in the center of Vancouver at Kiefer and Abbott. There are 4 towers built within roughly 10 years of each other, all built by the same developer.
Or within 100 feet of each other.
All within 100 feet of each other, all concrete, very similar construction, built by the same company.
Yep.
And what's so interesting about this is on multiple occasions, even if you account for height, product type, and age of the building, I've seen standard deviations from the mean of over 17%. And for most people, that doesn't mean anything. But basically what that means is that 33% of the product available on the market is more than 17% below the average cost sold. That's crazy. What that means is that you could hypothetically buy a unit and basically make 100% return on your equity the day that you close if you buy strategically.
Yeah.
And that's how much of the Wild West real estate is. And this is like for like condos in downtown on an intersection. If you started looking at this on a macro scale and looked at houses and larger investment properties, it becomes really interesting. Now, the purists of real estate will say you can't analyze houses like you do stocks. And the reason why they'll say that is because you have to go there, you have to see whether there's a transformer outside the door, whether there's traffic noise, whether or not it's good management, whether the strata is stable.
Whether or not you're next to a cemetery or...
And all that's true. But what I've started to do, and I've done this on 3 separate occasions now, is I've picked a market, I've analyzed it end-to-end statistically, and then I've found out of the 2,000 or 3,000 active listings, 50 or 60 statistical outliers. Those statistical outliers are the only ones I bother to walk through. And yeah, some of them, there's a reason why the price is below. Or some of them, there's a reason why there's something defunct with the building. But the vast majority of them wind up being just a motivated seller. Something isn't in line. Something, someone needs to sell now, someone needs to buy now, whatever the reason is.
Yeah.
Something has happened where there's a market discrepancy.
Yes.
And because of the lack of liquidity in the market, typically you're looking at 60 to 90 days in a good market. But in a bad market, you could be half a year to a year quite often. So what I found is that this is an opportunity because you can buy something and basically have your investors make most of their money back just by holding it.
Yeah. And that's why a lot of foreign investors are coming in but sales are going down.
So I've run 3 syndications so far, and I've done it on a pre-sale basis. And the reason why I've done pre-sale is because you get synthetic leverage. And this is something that not many people talk about. And synthetic leverage is basically, it's equivalent of having financing of 80 or 90% on your money without actually qualifying it for it under debt service. And this is how a lot of the people from foreign countries are coming in and buying pre-sales.
But that's scary, man.
It is scary because it's leverage that you don't actually have the ability to debt service, or you don't have to qualify under a debt service status. So unless the market keeps going up, the default rate causes dominoes to fall, and you can see a substantial shift in the market. That's what worries me about a market like between Brighouse and the casino in Richmond, is that such a substantial portion of those condos that's being sold is going to foreign ownership, and they're only having to put down 10% up front, 5% and 5% over the period of the next year. This can cause issues.
Okay, now this is the questions the people most wanted questions I'm going to ask right now. Most asked questions, the questions people want to know. Where do you see the market in 1 year?
I think it very much depends upon the product type. Single-family homes, I think, are going to stay soft for the next year at least.
Do you see a huge decline?
Because the tightening in the lending criteria that's happening right now with the banks.
With the more and more houses appearing on the market, doesn't that create a sense of panic?
Well, not only do you have an increased supply in some cases, actually for the last 6 months there's been a decrease in supply since July, which is why prices have held stable. But more to the point, single-family homes we have all these senior citizens in their 60s and 70s who are looking to eventually get out and use that lump sum as their retirement.
Yes.
In addition, they have to downsize because they're heading towards senior citizenry. They have to, get support and be in complexes. So as a result, there will be a supply coming on of single-family homes, but right now there's a substantial amount of demand for it too. So it's relatively flat.
Now let's go 5 years.
Okay, single-family homes, land. It's hard to argue that land isn't going to go up. Demand is still there. Unfortunately, financing is the counter component.
And rates going up.
And rates going up. And so as a result, you got an issue where there's a substantial number of houses that may be sold in the next couple of years, and you've got demand from foreign ownership and from high net worth individuals. But ultimately, I think what's going to happen is a lot of product is going to be converted, especially around the Vancouver core, is going to be converted to 4 and 8 story mixed use or even higher density.
Mm-hmm. So that's what you see happen. So do you see a crash?
It depends on the product. There's the potential of a crash for high-end product, luxury product in particular.
Yes.
However, if you were to talk about, like I said, product below $750,000, there's such a pent-up demand for people desperately trying to get into it. Maybe the 750 is a little aggressive. Maybe you want to taper that back to 650 or 500, depending on your market. But if you were to say, what is actually affordable relative to income? Yeah, you're stretching at 500, but even if interest rates shift up a point or a point and a half, you're not going to cripple that product because there's such a pent-up demand.
So basically, you don't see basically a massive 2008 crash like they had in the U.S. with the housing sector.
Well, the big difference between Canada and the U.S., and this is what people really miss, is personal covenant. So in a lot of the ninja loans, you weren't even personally liable for your mortgage.
Yep, those jumbo loans, they had jumbo loans where they even consolidated a bunch of your debt on top of that with the equity that you said you just grew.
Yeah, so you had no personal liability. If you default on mortgages in Canada, it haunts you for a minimum of 5 years.
Okay, so it's really hard to walk away from that.
Very hard. So as a result, what will happen is you won't get the mass exodus of people just dumping their properties and giving them back to the bank.
Yeah.
You'll have a few people who are truly desperate that need to do that, but everyone who can possibly make their monthlies is going to hold on as long as they can.
Right. Okay, do you see, so you don't see it as big as the U.S. then?
No, I mean, there isn't the risk of that happening because there comes a point where they will drop the interest rates again once enough people start feeling the pain.
Okay. So that's your forecast. All right, that's very fair. I'm kind of more that I see a huge condo. I see everything crashing because there's just too many people bought out of the market, and the government, the government and the mayor and all the people are putting in regulations and tightening loopholes so that this doesn't continue. And
so now we're talking about loopholes.
So
here's the thing: if I go to a lawyer and I say, "Hey, can you incorporate a company for me? I'm a foreign investor, and I want it to be registered at your address. So it's a BC registered corporation.
Sure.
I want you to be the person in charge of that company."
Yeah.
It doesn't cost that much, a couple $1,000. Guess what that does for me? That takes my name off a title of a multi-million-dollar home.
And it goes into a corporation numbered accounts, numbered company.
So now with the federal laws changing, I'm going to get hit with capital gains either way. So there's not a big incentive for me to have it in my personal name. So as a result, yeah, I'm still going to hit with capital gains tax, but I get to skip the foreign ownership tax, the 15%. And there are literally tons of loopholes that could come through this. Now, don't quote me on this. I am not a tax expert. I'm not a lawyer. If you just look at the principles of how they're planning to track this foreign ownership tax, this 15%, it's based on registry of title, because otherwise it's too cost prohibitive for them to bother doing it.
Excellent. Well, there you go, guys. You have it here from the professional perspective, from someone that actually knows what they're talking about, Mr. Green. And I appreciate you coming on our show and giving your perspective. It means a lot to me. It means a lot to my viewers watching from all abroad and everywhere. And definitely take everything you said into consideration because, like I said, avenues split everywhere, and then there's no. It's predicting something. I'm seeing a lot of post-diction in the media, post-dicting saying, "Oh, look what's happening now. We told you this." No, you didn't. It's happening now. You're telling us now.
Yeah.
No, you're not. They're not predicting. There's a lot of post-dictions because a lot of people don't know where things are going. I'm just seeing a big crash coming. I just see a lot of people bought out. I see a lot of people. The governments closing those loopholes, just like you said about the corporation. Maybe they'll a year from now smarten up on that, and a year from now smarten up on someone else, and a year from now, and then eventually it gets to a point where it's just a dam.
Well, I mean, you gotta ask yourself who our Premier's lead real estate consultant is. I know him very well, so I'm not going to say his name.
Yeah.
But if you look at his vested interests relative to the laws, you could argue that there's a lot of vested interest saying that we don't want those loopholes to be closed.
Okay, so it probably keeps that little motor going in the back end. But it does scare a few people away.
Oh, absolutely.
It does. Anyways, guys, thanks for watching. Don't forget to hit the subscribe button. Comment below. Let me know what you guys think on his insight on this. Very professional insight. And thanks for coming on my show.
Thanks a lot. So if you have any questions or would like to know more about the real estate industry, please contact me at Parametric Homes Consulting Limited or www.parahomes.ca.
Thank you.